outpace the king of crypto. Let's break it down and explore how they're pulling it off. Traditionally, investing in Bitcoin meant buying and holding the cryptocurrency, hoping its price would soar. But Bitcoin treasury companies like Strategy, ticker MSTR on Nasdaq, are rewriting the playbook. They're not passive investors. Instead, they're using tools from traditional capital markets, like issuing shares and taking on debt, to grow their Bitcoin holdings faster than the market. Their goal? To increase something called the Bitcoin per share ratio, or BPS. In simple terms, BPS measures how much Bitcoin backs each share of the company. The higher the BPS, the more Bitcoin value each shareholder owns, regardless of Bitcoin's price movements. So, how do they do it? One of their key strategies is called at-the-market equity issuance, or ATM for short. Here's how it works. When the company's stock price is trading at a premium, meaning it's worth more than the actual value of its Bitcoin holdings, or net asset value, NAV, they issue new shares. The cash raised from these new shares is immediately used to buy more Bitcoin. Now, you might be thinking, doesn't issuing new shares dilute existing shareholders? Technically, yes, but here's the magic. Because the stock is trading at a premium, the company can buy more Bitcoin than the dilution would suggest. This increases the BPS ratio, meaning each share now represents more Bitcoin than before. For example, in 2024, Strategy pulled off an impressive 75% BTC yield. That means if a share was backed by 0.001 Bitcoin at the start of the year, it was backed by 0.00175 Bitcoin by year end, without Bitcoin's price needing to rise at all. That's what analysts call BTC native outperformance. But equity issuance is only half the story. These companies also use leverage, borrowing money to amplify their Bitcoin holdings. The trick is to borrow at interest rates lower than Bitcoin's expected compound annual growth rate, or CAGR. For instance, if a company believes Bitcoin will grow at 20% per year and they can borrow at just 8%, they're pocketing a 12% spread. That extra cash is used to buy more Bitcoin, further boosting the BPS ratio. The key here is discipline, using leverage conservatively over long periods and with safeguards to avoid liquidation risks during Bitcoin's infamous price swings. When done right, this strategy turns borrowed funds into a powerful tool for growing Bitcoin wealth without exposing the company to short-term volatility. Put these two strategies together, ATM equity issuance and strategic debt financing, and you get what analysts are calling full-stack Bitcoin yield engines. These companies aren't just tracking Bitcoin's price, they're actively growing their Bitcoin per share ratio, delivering returns in Bitcoin terms, not just dollars. Strategy, the poster child of this model, has shown how effective it can be. But it's not without critics. Some argue these stocks are overpriced, pointing to high market cap to NAV ratios, where the company's stock market value far exceeds the value of its Bitcoin holdings. Supporters, however, say this premium is justified. It reflects the market's confidence in these companies' ability to generate consistent BTC yield and outperform Bitcoin itself over the long haul. So why should you care? For investors, Bitcoin treasury companies offer a unique way to gain exposure to Bitcoin's growth while potentially amplifying returns through financial engineering. Unlike holding Bitcoin directly, these companies use capital markets to create a BTC yield that can outpace the cryptocurrency's price appreciation. It's a bold strategy that combines the best of traditional finance with the disruptive power of crypto. But it's not without risks. Leverage can amplify losses, and high premiums can lead to volatility in stock prices. Still, for those who believe in Bitcoin's long-term potential, these companies represent an innovative way to ride the wave. Bitcoin treasury companies are proving that there's more than one way to win in the crypto game. By leveraging equity issuance and smart debt strategies, they're not just keeping up with Bitcoin, they're beating it. Could this be the future of crypto investing? Only time will tell. But one thing's clear, these companies are taking Bitcoin to a whole new level. Stay curious and keep exploring the world of finance. Don't forget to like and subscribe for more live updates and crypto insights. We update daily. Stay ahead with Billions Business Blueprint. Dormant Bitcoin wallets spring to life. 770 BTC moved in 6 mysterious transfers. In a striking development for the cryptocurrency world, Bitcoin's early adopters are once again making waves, as 770.0589523 BTC, valued at approximately $90 million, was transferred from long-dormant wallets over July 28 and 29, 2025. These 6 separate transactions, tracked by blockchain analytics platform BTCparser.com, mark the latest chapter in a growing trend of vintage Bitcoin wallets, some untouched for over a decade, suddenly coming alive. Despite the significant movement of funds, Bitcoin's market price has remained remarkably stable, shrugging off what might have been expected to cause ripples in the crypto market. A surge in dormant wallet activity. The recent transfers add to an already notable year for dormant Bitcoin wallets. According to a recent analysis by Bitcoin.com News, 101,003 BTC from long inactive wallets have been mobilized in 2025 alone, with an additional 471.8678 BTC moved just days prior to this latest batch of transactions. The 6 transfers over the past 2 days, totaling 770.0589523 BTC, highlight the continued awakening of Bitcoin's earliest holders, often referred to as crypto OGs or old-timers. The largest of these transactions originated from a wallet created on March 27, 2013, when Bitcoin's closing price was a modest $83.42. This wallet, which originally held coins worth just $28,618.38, transferred 343.0015824 BTC, equivalent to $40.38 million at 11 a.m. Eastern Time on Tuesday, July 29, 2025. The transfer occurred across 2 block heights, 907601 and 907637, signaling significant activity from this single entity. Following closely behind, 2 wallets from 2013 also sprang into action. One, established on May 29, 2013, moved 20 BTC, while another, created on June 17 of the same year, transferred 25 BTC. Both transactions, though smaller in scale, underscore the breadth of activity among early Bitcoin adopters. Another major transfer, likely linked to the same entity behind the 343 BTC move, occurred at block height 907670. This wallet, dating back to March 24, 2013, sent 330 BTC, further amplifying the scale of these coordinated movements. Just 5 blocks later, at block height 907675, a wallet dormant since May 27, 2017, transferred 22.36 BTC, adding to the flurry of activity. Perhaps the most intriguing of the 6 transfers came from a wallet created on August 28, 2011, one of Bitcoin's earliest days. This legacy pay-to-public key hash P2PKH address, untouched for nearly 14 years, moved 29.69 BTC